Hello traders and welcome to bestforextrainingonline.com. Today I'm going to be talking to you about trend lines. I will give you a few tips how to use trend lines, how to profit from trend lines. In my website where you can find this information, you go to the indicator tab here in the menu, and at the bottom of the page here you see trend lines, and that's where this video is going to be stored for further reference. I will encourage you to visit the rest of our sections so you can find some useful information here as well. So trend lines are very simple to use. They're widely used throughout the markets and by many traders. I personally like using trend lines a lot. They're easy to identify, and it gives you good entry and exit points in the market. You can use it in any market. You can use it in the Forex, futures, stocks, options. You can use it in any time frame. Any platform pretty much will offer you the abilities to draw trend lines. And you can use it in any time, in any market conditions, in a choppy market, trending markets, bull market, bear markets. It doesn't matter. You can use it. You can also use it to show diversion signals in MACD indicators, RSI indicators, or CCI indicators. So they have plenty of applications, and they're very user friendly, and as you will see, they'll give you plenty of interesting entry and exit points. So let's go to our price charts over here. Bear with me a second. So this is a price chart of the pound Swissie. This is one of my favorite pairs to trade. It's very volatile, it moves a lot, and this is a monthly chart, and as you can see, let's try to identify some trend lines here. They're very easy to spot, like you can draw one here easily. This is a MetaTrader 4 platform, and as you can see, it's very easy to identify. This is in a uptrend market. Let's delete this one. Let's do another one. You can use it here for a downtrend market. As you can see, they're easy to draw and to identify. There's one more over here. As you can see, a break below this trend line gives you a very good trading opportunity. This is a monthly chart, so this is thousands of pips that you could possibly make in this trade. Let's see a weekly chart. In a weekly chart, you can. This is more recent data. There was one here. This was a very nice trade. I got a few pips in this trade. Let's zoom it up a little bit so you can see it right here. There was one more recently here. I got into this trade as well. Got about 250 pips. Then got stop out because I put my stop too close. But as you can see, you enter here and you have plenty of opportunities to the downside. As you can tell, the pound has been very weak lately. So I've been trying to get every opportunity that I have to short the pound. I'm on it. This is a trend line that I'm drawing the weekly chart. You can see here in the daily chart, I have another one mark over here. Let's see that one in the 1 hour chart. Bear with me here a second. There it is. And this happened recently. This was, let's see. This was October 1st. There was a break in the trend line. And then after that, the price dropped pretty much about close to 200 pips. Also, what I use to confirm my trades is after a break in the trend line, lots of times the price will come back up, retest that trend line, and then crash down. Sometimes it just keeps going. The other thing that I use a lot to confirm my trades is the exponential moving average. I have two exponential moving averages in here. You see there's a dead crossing here that is a bullish, a bear signal breaking the trend line. This is a good confluence of events to tell you to go short. If you look at our indicator too, at this point in time, it was around this area here, which is very bearish as well. So this was a very good trade. I did not get into this trade. I was looking for it, but it was, when I saw it, it was too late. But you can use this in any currency pair, any time frame. Let's see a chart here from the Australian US dollar. There's a very nice trend line here to the upside that is being currently tested. This is a current chart of the Australian US dollar, and it was test here this last week, and I'm just waiting, to be honest, for this to close below this trend line, break below this support and resistance level right here in this red line, and if price crashes below this, I'm going short. You can also use it to delineate channels, and this is an example of a bullish flag in a 4-wave, and you can trade this as a break from the upper boundary, or when it tests the lower boundary, it takes off. So here, if you zoom in a little bit closer here in this area, if you were short for some reason in a lower time frame over here, you can use this trend line as an exit point. You go short, you exit at the trend line, because most likely you're going to see a reaction over there, as you saw it here. You see that reaction, it took off. Here, we might get a retracement here and then crash down. A good way to see it, to trade this, if you want to wait for a retracement and then to take down, is to use your Fibonacci tools. So you draw a Fib level here and you see what your Fib levels are. And as you can see, it went down, it retraced already to the 38% retracement. You know, it can go all the way to 61, 78, or 79% here. It can retrace all the way to 100%. So just wait for a rally and then shorter. It will be a higher risk, but me personally, I'm going to wait for a break in the trend line, a break in this support resistance level, because as you can see, this is a very strong support and resistance level. Price was tested here, tested here, tested here, and then it finally broke above it. So it's a very strong support and resistance level. As you can see here, it was tested over here, and it's been a very historical important point. So you want to be careful, but most likely if you have a good break in this trend line, a break in the support and resistance level, I think the only way to go in the Australian USD is short. I'm going to show you another chart about the Dow Jones. Dow Jones Industrial Average. This is a current chart. As you can see, I have a little trend channel drawn here with trend lines, and price has respected these trend lines very well, in particular the middle trend line. And even though the media keeps saying that the Dow Jones is going to go to, I don't know, 15,000, I'm from the school of the Elliott waves, and I think this is a counter trend rally, and the worst part of the collapse in the Dow Jones still to come. So I am short the Dow Jones. I'm expecting a bounce from this trend line here in the next few days. I'm expecting this to bounce up a little bit, maybe respect this level. Let me blow this up a little bit. Maybe respect this recent low over here, and then go back up, retrace, and then crash down that line. I will be very honest with you, if we get a break in this trend line, I will completely expect in the next few months the Dow Jones to retest the 6,000 and maybe break below it. There's plenty of things that are happening around here that will be a very nice bearish signal. As you can see, our indicators, our exponential moving average, are about to cross. So at that cross here, a break in this trend line. Look at the indicator over here. It's very, very bearish. There's plenty of things that will tell you that the economy is not recovered, that the Dow Jones is going to keep going down. I am short right now. If this confluence of events happen, I'll be short. I'll add some to my position. And this is a clear example how you can make money in a bull market, bear market, it doesn't matter. And I can assure you that there's plenty of people that are looking at this trend line out there, and they're waiting for the same thing as I am, of a decent break below that trend line and just to go short. So just a tip out there. I'm not telling you to go short and bet your house on it. I'm just telling you what I think and what I'm gonna do. Hopefully this was a little bit helpful to you and will help you in your trade. Trend lines are very easy to apply, very easy to identify. Good luck in your trading.